What's going on, guys? Welcome back to another episode of Hustle with JesseW, and today we're going to go over why I still don't think that GME is going to bounce up, but what I really want to know is, what do you think? Check it out. Guys, trading is not easy. It's not as easy as it made it look, as Wall Street Bets makes it look with them diamond hand stuff. It's not easy. You got to inform yourself, right? Check out the daytraderchatroom.com, right? That's my website. That's my chat room there with courses and everything, like huge video library. There's so much information jam-packed into that website. It's crazy. You can download the free course. I'll leave it there in the description section and in the comment section, or you can join us and test out the site for just 5 days for $5 so you can kind of get a feel for it. All right. So make sure you check those links out in the description section below so that you have access to it. All right, guys, so last week I made a video talking about how I don't think that GME is going to go back to $300. Of course, many bag holders came into the comment section and expressed their displeasure with the video, right? And that's expected, okay? That's expected. However, in this video, what I'm going to do is I'm going to show you a couple more charts that look very similar, and the reasons why I still don't think that GME is going to make the recovery that some people expect. Especially the people who generally expect this are people who aren't very well educated in trading and how these patterns typically develop, right? Now, we're going to jump into that, but before we do me a quick favor, smash that like button if you enjoy this content, or if you don't and you're holding it from $300, I understand you might not like what I have to say. If you don't like it, well, it's all right. You can hit the thumbs down button on it, right? The dislike, or you can comment in the comment section below and let me know why you think it's going to come back to $300. Also, if Robinhood did you bad, go ahead and check out Webull, link in the description section below. You can download the app, fund your account with just $100, and you're going to get 2 free stocks currently, okay? So make sure you take advantage of that, and let's go ahead and jump right on into these charts. Now, you see right here, GME, we already know it's done what it's done. You know, you had the short squeeze like we talked about last week. Then you had that gamma squeeze that kicked in and sent this thing. You know, everybody's talking about, oh, it's going to go to the moon. My friends, it already went to Mars. Okay, and then it started to come back down to earth. Okay, and obviously we know that there was a lot of manipulation that went along with Robinhood and some of the other brokerages and everything. I mean, I made an entire video on the topic. I'm going to put the tab somewhere around here so you can go check that one out later as well. All right, so we know that, but now it's time to be, you know, real and get back to reality, right? It's just the way it is. And I know that it's something that's really hard for people to understand or accept. But I know it's it's generally happening to people who are newer to the market, okay? And they don't understand how really the market works. If you're new to the market, I'm going to leave in the comment section and description section a link to my free course. You can download that free course and go through it. It'll help you understand a little bit better how the market works, okay? Now, a lot of people made a ton, and I'm talking about an absolute ton of money. You see this bull flag formation here on the daily and break up and out of it? A lot of people made so much money. I'm not even going to talk about in here. I mean, people made a lot of money in here. Right in here, they made a ton of money. People who didn't know any better about how to trade, they just jumped on in. They made a ton of money. I mean, smart people sold, you know, as this pushed up and booked huge gains. What's going to happen, sadly, to most of these people, and I know because I've been there, DRYS way back when I made some good money on it as a brand new trader, and then I proceeded to lose most of it all on the consequent drops, thinking that all stocks did was just make these huge moves, right? So I understand, but some smart people who made life-changing money in this range and sold out and booked that profit, you know, hopefully they're going to do smart stuff with it and you know, some long-term investments, some real estate, you know, pay off debt, stuff like that, right? I hope. And then maybe you can, I mean, you know, it's not a bad thing to keep a little percentage on the side to mess around with some of these, you know, some of these stocks in the long run and play around, right? But smart people, right? Like, let's say they had $1 million that they made on this, right? Paid their taxes. If you lived in California, I'm sorry, you got destroyed. If you lived just about anywhere else, especially Texas, Florida, then you got to keep a good chunk of that because there's no state income tax, right? So let's say let's just use a round number, right? Let's say you had $700,000 left out of this, right? They left $100,000, you know, to mess around with these stocks, these like small cap stocks, like active trading, okay? And then you had $600,000 left, paid off some debt, you had $500,000 left, you know, maybe you paid off your mortgage, you might have like $300,000 left, boom, long-term retirement account, boom, 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 just, that's what I would do, right? You know, just thinking off the top of my head, not really planning much out. And obviously it's not financial advice, it's just something that I would have done more or less roughly, right? And other people, they're gonna lose a whole lot. But what I think that GME is going to do here is just, it's going to go ahead and bounce around here between this 50-day moving average and $100 for a little bit, okay, for a little bit before it just dwindles on down. Now I'm going to show you a couple charts that are going to look kind of similar, and they're going to basically re-emphasize my thesis on this. And on the whole pattern of how this stocks, you know, how these stocks like this that squeeze and go parabolic like that, they always come back down to reality. They always come back down to reality. Now, look, a realistic price on GME is in the $20 range, okay? That's a realistic price on GME in the $20 range. It doesn't mean it's gonna go to $20 on Monday. It doesn't mean it's gonna go to $20 next week, okay? It's gonna take a while to get down there. It's gonna be plenty of bouncing around, okay? But what I'm telling you, right, in my opinion, like I said in the last video, is that I don't think it's going to get up over $100 very much. You know, it might go visit 110, you know, maybe 115, maybe. And those bounces are going to get sold into over and over and over again, because all the bag holders that bought this thing in 300, 400 bucks, even in the 200s, okay, every time it hits 100 or breaks up over 100, they're going to try to get out of that. They're going to try to get out of it and try to sell into it. Shorts know this, so, and they also know $100 area is going to be tough resistance, so they're going to pile back in their short, stuff like that, and that's what's going to send the stock lower. If you see here, we tested 100 on Friday, big increase in volume, and we couldn't break through it. And not only couldn't we break through it, it got decimated from that level. Decimated from that level. Okay, it went from a high a day of $95. Okay, and it closed off at 63.77, it says there, okay? That's selling pressure, my friends. I understand that most people who chase this don't understand technical analysis, but this wick right here that you see, all right, this is the body of the candle down here. It pushed all the way up there. It got sold into hard, so that price level got rejected. It came all the way back down here, closed off down here, big increase in volume showing big pressure, you know, selling pressure up in front of that $100 area. That's what that shows, technically speaking. Another technical aspect here is we had a 50-day moving average bounce. This blue line right here is 50-day moving average. You see we pulled into it, and then we bounce off of it. We bounce off of it there. I think it might hold it for a little bit, but I don't think we ever see GME at 300 bucks again. That's the whole point of this, right? I don't think we ever see that, but I really want to know why you think you're going to see that. Now, look at these charts. I'm going to show you some past charts here. I showed this one on Friday. I'm going to show you another one after this one. This is KODK. Okay, here's KODK. Let's go ahead and zoom in. Well, we don't have to zoom in too much, because then, there we go. If we zoom in too much, we're going to miss out on the entire point of this. All right, so here you go. There's KODK right there. You see the move straight up, very similar to GME, right? And then the consequent drop, you see how it drops, and then it kind of just like bounces around a little bit for a few days, right? You see that, right? Right in there. Look, I'll zoom in right there real quick for you. Doesn't that look very familiar? Guys, I'm gonna go right back to GME, and then I'll zoom back into this one. Look at GME. Doesn't that look very familiar? The run up, the rejection comes back down and starts to bounce around a little bit, right? Let's go back over to KODK. Let's go back over to KODK real quick here. Zoom out some and zoom in right in here. You see the big push up, huge push up. Then slams back down and starts bouncing around. Now what happens after that? See, more bouncing around, more bouncing around. But what I want you to see is the key level here. Right there at $15. That $15 area is very strong resistance, okay? And here you see the stock just could never get back above it. Just bounces right into it, gets sold into it. Why? Because everybody's back holding up here. Every time you get that little bounce, a little relief bounce, they're going to sell into it. And shorts are like, huh, good area to start shorting. And they just start shorting and shorting and shorting. And this is what you get. That's exactly what you get right in here. Okay, that type of pattern. I want you to take a mental picture of that. Now, we're going to move over to another chart. I'm going to show you another chart here, okay? That's Sino, S-I-N-O. And it's not even this push here. We're talking about, we're going to go way back. Let's go way back. Here we go. Let's go way back, 2016. 2016, when the shippers went insane. This is a shipping stock for those of you who are unfamiliar. And we're going to zoom in. There we go. Look at this, right? Big run up, squeeze, huge squeeze. This stock went from $5 to 70 something dollars. Huge move, absolutely huge move. Consequent big drop, okay? And then what can we do? We can't get back over this $30 level, 27 bucks, 28 bucks. Every time I jumped in, see right here, jumped over 30, got sold into. Here tried to make an attempt, got sold into. Here tried to make an attempt, big volume, got sold into. Okay, and this continues. See, $20 sold into. Look at that. Look at that. Did it ever get back up there? Years, and still hasn't gotten back up there. Look, we finally broke through $10 on Friday. I'm sorry, not on Friday, on Wednesday, and it couldn't hold it. Back under 7 now. Okay, let's find you another one. Here you have Tilray. Tilray. Big move from the 20s all the way to 300 bucks. Never to see that area again. Every pop got sold into, as you see there. Every single pop sold into. Sold into. All right, guys, so those are the reasons. Now, let me know yours in the comment section below. Remember to subscribe to the channel if you haven't. Hit that notification bell so you're alerted next time I upload my videos. And I'll catch you on the next one.